Well, what we say in an annual economic report is that when you analyze the dynamics of inflation, it's very important to prevent inflation going from a low inflation regime to a high inflation regime. When you have a low inflation regime, inflation tends to be self-stabilizing at a low level. But if things get going up and the dynamics change, you might end up in a high inflation environment. And then is when it really becomes far more difficult to bring it down because it's self-reinforcing. So if, for example, you have persistent high inflation, inflation expectations adjust, workers ask for more wages, firms pass through the increases in costs, and that feedbacks itself again. Therefore, what we are seeing right now is that we're in the transit towards there, and therefore right now it's important to act in a decisive way so that that dynamics is curtailed.
I mean, that what we are describing, it's exactly what I'm hearing from all the CEOs we are speaking to. They're all happy to pass on the high costs. So I guess we are quite high up the ladder in that transitionary period already.
Yes, I mean, the level of inflation right now is quite high. I mean, we see now countries like Spain hitting 10%. So it's important to act in a decisive way to bring down and curtail more than anything the dynamics. Part of the job will be done by the correction of some of the relative price changes that we have seen, but we cannot fully depend on that. So some monetary policy action is really of the essence.
Would you say that the ECB, especially because we're talking about the ECB here on the ground a lot, should move faster in its hiking cycle, not just have a timid 25% in July?
Well, they have to feel their own pace. Certainly, they have been affected more by some specific external shocks, like the energy shocks coming from the Ukraine-Russia war, and therefore they need to take that into account. The economy is not as overheated in other parts of the world, but they have to be very mindful, as they are, of the potential dangers of acting too slow.
Yeah. Talking about the US, that's probably the other big economic area you had in mind. Do you think the risk of recession might actually mean that they have to cut rates once again in next year?
Well, I don't see that very likely. I mean, I think traditionally when you act, you have to act. You have to keep inflation relatively high for some time so that inflation expectations adjust, and then things correct themselves downwards. It's hard to know, but I don't see that scenario as very likely at this stage.
Are you seeing a recession scenario, though, being likely with the supply chains still being majorly disrupted? And it seems that the world is changing, and perhaps the disruption is a bit here to stay.
Well, you know, at the same time, there is flexibility in the medium to long term. There is more flexibility in the supply, aggregate supply. I mean, there is some tendency to confuse supply chain problems with inflexible supply response. And some of what we're seeing is that the elasticity of supply in the short term is very inelastic, but it is far more flexible as we move along. And I think that as time passes, some of the factors that were tightening things up, now we're seeing them have more freedom, more room to play. So I think at some point soon we should see more flexibility in supply, and that should tame some of the problems.
How concerned are you about the situation in emerging markets? Because clearly they do suffer from higher rates in the US, higher rates in the industrial world.
Well, you know, I think that they have learned their lesson for the past 20 years or so. When they see US interest rates going up, in particular, they see that the storm is coming, so they prepare themselves, and that meant that they hiked interest rates sooner than others. And I think that has given them a fair amount of protection. And obviously it's also good for them to manage the spike in inflation. But traditionally, the mechanism of transmission of these shocks was through the exchange rate, And what you see today is that the emerging markets exchange rates have behaved really well. And that's also helping them anchor better inflationary expectations.
If you look at the world, just as like a general last question, where do you see the biggest risks and what makes you most concerned when we talk about economic outlook?
Unfortunately, we're going to have to break into that conversation there. And we'll leave you with a look at US futures as we head out to the rest of CNBC programming. Do stay with us here on the channel. Plenty more to come. A bit of a positive uptick for the US futures there. That is it for today's show. I'm Rosanna Lockwood. Worldwide Exchange is up next.
The ocean